This is Mark Gordon with GoldenTicker.com with a weekly market update for November 1st, 2009. And IBD is saying that the markets are in a correction, and we're going to drill down and take a closer look at what is happening in the markets here. This is a monthly chart of the S&P 500, and you can see that we started to rally up here off the bottom here in March of '09, and each successive month here we have made a higher high. Now in October we reversed off of those highs and actually made a lower close, and this is the first time since the rally began that we did that. And you'll also notice here that this is the 20-month moving average here, this green dotted line, and we're sitting right on it, or just below it actually, right now. So this may offer a bit of resistance for the S&P 500. And when we do get a close over this 20-month moving average, the markets are said to be back in a bull market. So this is categorically just a bear market rally so far. And looking here at a monthly chart of the Dow Jones Industrial average, we can see a similar story here, sitting right at or below the 20-month moving average here. We did have a down close here in June on the Dow Industrials here, but a similar story as in the S&P 500. And looking now here at a weekly chart of the S&P 500, you can see where we came up off the lows here made in March and have rallied ever since. We did have a slight correction here. I think it was about an 8 or 10% correction here in the summertime, and we've marched up steadily since then. You can see here that we have last week closed below this blue line, which is the 10-week or 50-day moving average, on heavy and increasing volume here. That's a pretty negative sign. Although we did do it back here when we corrected here over the summertime, and we actually had two closes under the 50-day or 10-week moving average before rallying higher. So we're sort of at a point here where you know, this the next couple of weeks will tell the real story of where we're going on the indexes. Looking here at a weekly chart of the NASDAQ, which has actually been the leading index of this market rally. Similar story here, rallying up off the March lows, coming here into the summer, having a bit of a correction, then rallying higher, now closing down below the 10-week or 50-day moving average on increasing and heavy volume. And looking now at a few of the real strong leaders of this rally, we're looking here at Apple. Coming up off the March lows here, rallying quite strongly here, more than doubling. And you can see here that Apple is still above its 10-week or 50-day moving average, and it never closed below it the entire trip up. So gotten solid support at this line, even though it challenged it over the summer here. So a close below next week or the week after, below this this blue line here, would certainly be a negative sign for Apple. But all eyes are on these big stocks like Apple to see the health of them. And this was a very ugly reversal here off the highs, sort of trying to match almost exactly these bars here from week to week, retracing all of the move here. And Baidu.com has also been a very strong leader. This is a Chinese, sort of the Google of China. And again, rallying, actually got going a bit before the market really got going back here in January of '09, rallying up quite strongly from about $100 up to $400 for about a four-fold move. Now Baidu got into trouble here last week for the first time, closing below the 10-week or 50-day moving average during the whole trip up. So very negative sign. Hasn't done this since back here in January. But an interesting note is that it did get support here at the 20-week or 100-day moving average and bounced up quite strongly to close in the range of the 50-day moving average. But you can see here that volume was quite heavy for the week and increasing. And speaking of Google, we're looking at the chart here, coming up off March lows made here, rallying strongly. Closed below the 10-week moving average here in the summer sell-off, but rallied back quite strongly, and still well above this blue line, the 10-week moving average, closing now at its 4-week or 20-day moving average, and volume was decreasing. So Google still looking strong here. Now the markets have had their share of casualties though. This is FUQI. This is a leading Chinese jewelry retailer and one of the darling stocks of the IBD 100, constantly in the top 5. And this stock basically fell out of bed this last week on huge volume, slicing below its 10-week moving average and its 20-week moving average, and not really rallying up, not finding much support here in heavy volume. So a lot of these leading Chinese stocks have taken a real hit here. And eHouse China is one that's really fallen out of bed as well, losing support at the 10-week and the 20-week moving average on increasing and heavy volume here, so not a good sign. So we have a mixed bag here. Some of the real strong, heavily capitalized leaders like Apple and Google and Baidu are still acting relatively strong, but we have had a lot of stocks falling out. So this is a very treacherous time in the markets. It is earnings season, and IBD is calling markets in a correction. So now is the time to tread lightly, raise cash, and we're going to be waiting for a follow-through day to signal a new leg up in the rally. Thanks for watching, and I hope you found this video helpful. As you may know, making big money in stocks is all about being aboard the handful of true market leaders during a strong bull market. At GoldenTicker.com, we concentrate on locating only the strongest stocks and give you proper buy and sell points based upon our proven trading models. We also monitor the health of the general market to let you know when conditions are favorable. I'd like to invite you to begin your free 2-week trial at GoldenTicker.com now and get full access to all our stock picks, advanced lessons, and more.